Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Hantech Markets. Each week I'll take you through the key events that I believe will be driving your investments in the coming days. And certainly moving into this week, investors are still reacting to the precipitous selling pressure that we saw on the stock markets last week. Now that selling pressure was driven by several things, but I think the main factor was the fear that investors have now got of the earlier than expected tightening cycle from the Fed. Now that fear was brought on by an indicator called the employment cost index, which came in slightly above expectations, and that gave investors the expectation that perhaps wages are beginning to rise in the States. And following on from the Fed statement last week that underutilized labour was the main factor for keeping interest rates low in the States, that sort of then led them to believe that perhaps there were wage costs coming through the system later down the line, and that would drive an earlier than expected rate rise by the Fed. Ultimately, on Friday, we saw the wage costs remaining flat on in the non-farm payrolls report, but still, I think in the months going ahead that this is going to remain a theme. And every time we see any sort of indication that perhaps we could get some wage price inflation coming through the system, I think the market's going to take that negatively. So I think this is going to be something to watch over the coming months. I think in terms of the geopolitical events, they've just slightly calmed down a touch over the past few days, and that has certainly helped markets calm down. Last week we saw the VIX spike sharply higher on the week, up to 17, but it's actually now calmed down a little bit back to 15. So that's come as markets have calmed down a touch. The earnings season in the States is still very strong and a driver for good gains on the markets. And I think if you look at the Reuters data, it's around about 2/3 of companies in the States have beaten expectations on both earnings and also revenues, and that's out of about 400 of the 500 companies to report. So a good, strong, supportive element there. Now, in terms of forex, what are we looking at? Well, we've had, as I said, this dollar rally in the past few weeks, and that showed signs of a bit of a correction on Friday. But has that correction already run its course? Well, the euro's come under pressure again, and it's started to fall away back below $1.34 again, which could potentially now reopen the lows at $1.3365. Sterling has also equally been under a lot of pressure in the recent weeks, and also now in the last day or so has started to rally. And that has been driven and helped to be driven higher by the services PMI data for the UK, which is coming in higher than expected. And it just goes to show that I think that UK data is going to now be obviously supportive if it comes in higher than expected. I think it's still going to be a data-driven currency, so cable could well be a little bit spiky in the coming weeks. In terms of dollar yen, it remains in its big trading band between 101 and 102.80, and I think just there's a couple of sell signals at the top of that band suggest that that trading area is going to continue. Now it's going to put pressure on the 102.30 mark, and I think that is certainly key near-term level. If it breaks on the downside, then you could well see the dollar yen back towards 102 once again. In terms of stock markets, well, as I said, the earnings season has been a positive element, but the stock markets have come under considerable selling pressure in the last last week. Certainly, the S&P has remained the standout performer in terms of strength, but even that was come under big pressure, and that's broken a couple of key technical levels, but still just holding on to a long-term positive outlook. On the European side, however, the DAX and the FTSE and the CAC have all been really badly hit. And certainly the DAX remains the big underperformer, and I think that will continue to be whilst the geopolitical events in Russia remain on the table as a fear for investors. I think in terms of the FTSE, again, some key long-term levels, some big uptrends broken, also moving averages as well. So some of these European markets are really finding the strain. I think that could tell in the long term. You may well get a near-term bounce on the upside, but I think there's a significant amount for the bulls to do to recover this long-term positive outlook now. In terms of gold, well, gold I think continues to be held back by the strength of the dollar, and it seems to now be that the safe haven trade is not really moving towards gold on the geopolitical issues, it's more towards the dollar. So that is certainly not helping gold. It is benefiting slightly on the upside when you get the bad news coming out about Russia, but certainly it's not as much as it was. And I think you're now seeing a series of lower highs on gold, and it seems to be putting pressure on the 1280 support level. It's back under 1300, and whilst that is the case, I think we're going to see pressure on $1,280 on the support side. Okay, so where are we looking at in terms of the economic announcements for the week ahead? Well, on Wednesday we've got the UK manufacturing production. Certainly the market will be looking out for signs of capacity utilisation improving, and that will help to give the Bank of England a signal in terms of spare capacity in the market. And then moving into the afternoon, you've also got the trade balance for the US, and certainly that will always have an impact on the dollar. On Thursday, we've got the Aussie unemployment data, which always has an impact on the Aussie dollar, and also the Bank of England rates decision and the ECB. Now, the Bank of England's rates decision could be interesting because we might start to get one or two members dissenting and voting for a possible rate rise. So just watch this space on that one. In terms of Friday, we've got the Chinese trade balance, which has a tendency to have an impact on the commodity currencies, and then also the BOJ gives its own rates decision. So lots going on again this week. So I wish you good luck in your trading throughout this week, whatever you're doing, and I will speak to you next week. Thank you.